My wife and I made just over $1.2 million of income in 2024, and we did not pay one dime of income tax. Let me walk you through our strategy, implement the same idea. Here we go. So if you haven't already, check out the book Tax-Free Wealth by Tom Wheelwright. He's actually Robert Kiyosaki's accountant. And what he goes on to talk about in that book, he actually makes taxes a lot more fun to learn about than what you would think. But the whole concept of taxes is that it's all about incentive. The government is trying to incentivize you to make certain financial choices and decisions, right? So if you're a high income earning doctor or a lawyer or something along those lines, and you're making $1 million and you're being taxed 400 grand, it's not necessarily you're being penalized by the government. You're just not doing the things that they would like you to do. Things like start a business, things like invest in oil and gas or energy, real estate. Again, borrow money, take risk, do things out there in the marketplace that stirs economic activity. Because again, just because you're earning a lot of money, you're not really doing a whole lot for the government. Again, you're not creating jobs, you're not renting apartments out, you're not doing the things that the government would otherwise have to do themselves. You've heard of the projects before, and the government sucks at pretty much everything that they do. So they use the laws to incentivize investors like you and me to go do these things. And they give you deductions, subsidies, abatements to do these things, right? Understanding that. When you read this book, in chapter 7, he goes over, Tom describes this idea called depreciation. And on paper, depreciation sounds like a bad thing. Sounds like something's maybe losing value. But in rental real estate, depreciation is a phantom expense, okay? So if you buy $1 million building, usually you have what's, again, a phantom expense, and you depreciate over a straight line for 39 years. So it equals basically 25 grand a year in depreciation deduction. So again, $1 million property, say it rents out for 100 grand a year, you service debt, you pay expenses, you're left with $25,000 a year in income. Well, usually you would have to pay capital gains tax on that income, right? Or income tax. Well, with depreciation, if you earn $25,000 in cash flow and on paper you lost $25,000, these two ideas equal out and you pay no tax on the income. That's why they're incentivizing you to go and invest in these properties, to borrow money and to buy these assets, because you're renting it out to a business, or if it's an apartment, you're renting it out to people that are going to go and work for that money, right? The whole thing. So what was just described in the big, beautiful bill, it's been around before that, but they just brought it back to 100% bonus depreciation. And very simply, like I said before, you had to stretch that amortization of depreciation out over 39 years. Instead, you can front load the majority of that deduction into the very first year of your purchase. So I'll spare you the details of going into a cost segregation study, but very simply, all the items in a property accelerate in depreciation a lot faster than the actual